Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Greystone Logistics, Inc. quarterly report. Greystone Logistics, Inc. market capitalization of $0 billion is materially smaller than most of its industry peers of roughly $2 billion. Greystone Logistics, Inc. trades at a higher price-to-earnings ratio of 30 times and a lower price-to-book ratio of 0.97 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 57% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. Greystone Logistics, Inc. offers a diverse range of products and services that cater to various industries. The company's primary business involves manufacturing and marketing plastic pallets, which come in different types such as rackable, nestable, display, monoblock, half-barrel, slim keg stackable, drum, and mid-duty pallets. In addition to its core product line, the company also provides pelletized recycled plastic resins. This service is likely aimed at reducing waste and promoting sustainability in industries that require plastic materials. Greystone Logistics serves a broad range of sectors, including food, chemical, pharmaceutical, beverage, and dairy. The company's products are sold through multiple channels, including independent contractors, distributors, and direct sales. With its extensive network and diverse product offerings, Greystone Logistics has established itself as a leading provider in the industry. The company's presence is felt across various industries, providing customized solutions to meet specific needs. Its commitment to innovation and sustainability sets it apart from competitors, making it an attractive choice for businesses seeking reliable and eco-friendly products. The stock price of Greystone Logistics, Inc. has significantly dropped by over 43% in the past year due to several key events that have impacted the company's financial performance. One major contributor to this decline was the loss of a significant customer, which accounted for approximately 55% of total revenue. This loss resulted in a sharp downturn in sales and operating losses, with 6-month sales falling from $25.6 million to $18.5 million. The company also reported a net loss of $3.2 million, compared to a modest income in the prior year. The earnings release in October 2025 was another significant event that led to a decline in stock price. The company's poor financial performance, including a substantial decrease in revenue and operating losses, was reflected in its quarterly results for August 31, 2025. These events have had a lasting impact on the company's financials, with revenue decreasing by 6.33% to $57.87 million, and earnings seeing a significant drop of 56.71% for the full year 2025. In response to these challenges, management has implemented cost-cutting measures, including a 50% reduction in workforce and discontinuing temporary labor. The company is also actively seeking to broaden its customer base and has secured debt term modifications to support cash flow. However, despite these efforts, there remains substantial doubt about the company's ability to continue as a going concern. The primary drivers of revenue growth or decline in a company's financial performance are multifaceted. One key factor is the loss of major customers, which can have a significant impact on revenue. For instance, the loss of a major customer resulted in a $3.3 million decrease in revenue, accounting for 28% of the total decline. Another crucial driver of revenue growth or decline is the modification of terms with existing customers. When companies modify their sales arrangements with customers, it can lead to decreased sales and revenue. This can be due to short-term contracts or single performance obligations that limit long-term commitments from customers. The impact of these modified terms on revenue cannot be overstated, as they can significantly affect a company's financial performance. The financial performance of the company underwent significant changes between 2024 and 2025. Net income decreased dramatically, plummeting from $3,283,428 to a staggering net loss of $3,163,117. This drastic change is attributed to a shift in the company's financial status from taxable income to pre-tax loss. The profit margins also suffered significantly during this period. The gross profit margin dropped from 13% to an alarming -5%. Furthermore, selling, general, and administrative expenses as a percentage of sales increased from 12% to 16%, indicating inefficient cost management. These changes collectively contributed to the decline in net income and profit margins, highlighting the need for the company to reassess its financial strategies and operational efficiency. The company's financial performance has shown a positive trend in terms of interest expenses. According to the extracted summaries, there was a notable decrease in interest expenses from $570,081 to $468,517, representing a reduction of $101,564. This downward trend continued in 2025, where interest expenses decreased by another $36,684 from $275,372 to $238,688. In terms of debt level, there is no significant change mentioned on pages 8 and 9. However, it is worth noting that the company is actively working to reduce its debt through ongoing principal payments. This proactive approach suggests that the company is committed to managing its debt effectively and reducing its financial obligations over time. The company has made dividend payments to its preferred stockholders. For the 6 months ending November 30, 2025, it paid out $1,610 in accrued dividends. In contrast, for the same period in 2024, the payment was significantly higher at $96,575. Notably, there is no mention of dividend payments being made to common stockholders during this time. In addition to paying dividends, the company has also been involved in share repurchases under a stock repurchase program. However, it appears that no shares were bought back specifically within the 6 months ending November 30, 2025. The company did take steps to retire all of its preferred stock by paying $5 million, but this is not considered a share buyback in the classical sense. That concludes the financial summary for Greystone Logistics, Inc. Feel free to comment below, and I will be happy to answer them when possible.